Oh boy, people, we got ourselves a shooting star candle. The market's going to crash. Everyone worry. No. Not the greatest looking candle, not the greatest looking close overall, as we're back tagging into that 20-day declining moving average. In today's video, we're going to talk about some hidden levels to pay attention to in the S&P 500 for tomorrow's trading session. You're watching the Stock Market Brief Show. My name is Michael Silva. Let's get into it. So yes, people, the 11 sectors that make up the S&P 500 really today was, I just call this a nothing burger, especially if you look at the index products, they're rather unchanged. Now, if you were paying a close attention intraday, that wasn't quite the story. It started off a lot more bullish. And that could be because a number of reasons, right? Well, we gapped up, we rallied higher above that daily VWAP holding, and we eventually cracked down lower, closing near the low of the day. Now, what could have caused this? Well, the 10-year yield started the day off with a pretty monster gap down, so bonds were up, and then these started to rally back later. You pair that along with the dollar was coming off pretty hard and fast overall till around 9 o'clock to 9:30. If you just pull up a chart of the S&P 500 and you go, hey, what were they doing at 9:30 in the S&P 500? Well, you can see we were rallying up as the dollar was coming off, and when the dollar started rallying, guess what happened to the S&P 500? Clearly, it had an effect on the S&P 500 when the dollar was rallying. Now, if we go ahead and look a little bit further, where did the S&P 500 come up to? Well, we talked in yesterday's video about this pinch taking place right here. Remember, price action, it moves between expansion and contraction. So this is what you're seeing here. The market moves down big, and now we're contracting, getting very, very tight, leading us to potential break here in the very near future. If I zoom in, you can see that we almost tagged that anchored VWAP that was from the all-time high in the S&P 500, and we started to revert. After what? Well, we closed actually a gap that was right here, and you could see we started to back off after that point. Now, remember, I told you today we're going to talk about some key levels. Well, these key levels are being derived by the options market based off of implied volatility. It's going to give us a good range, a good idea of risk as to what to expect going into tomorrow. Tomorrow, well, what's going on tomorrow? Well, we have Fed Chair Powell testimony. So is he going to say something that's going to really rock the boat? Potentially. Remember, this is a 2-day testimony. And then on this day, on Wednesday, we also have the JOLTS data. And then on Friday, we even have more important macroeconomic data that could really shake up these markets. So what is the options market pricing in as far as risk goes tomorrow? We're looking at the SPY right now, and we're looking at roughly a $4 expected move. So that means the market can go up plus $4 or it can go down $4. It's giving us a range of risk, which means what? It means that we can come up here to around 408.48 and 400 down here below us, 450 cents. Okay, now remember, this right here is giving us an idea. So if you think of this as, the bell curve, it's basically telling us 68% of the time, right? 68% of the time, it closes within that one standard deviation. One standard deviation would be closing within this box. So if price action does get outside of these levels, right, say if it comes down here to around that 400, that's already the expected move that the options market priced in. So perhaps as the 5-day moving average starts to incline, this could be a potential area saying, hey, if you miss this entire run, it retraces back into this area. It could potentially offer up a good area of support. Now, you don't want to just enter right into it. Remember, we talked about, right here, could be a potential back test of level of support, right? So if we came all the way down here, you have the 5-day curling up, you have this prior area of resistance, and then you have this trend line, all comes into confluence right over here. And then you have the expected move for the day as well. So if it comes down into this area, like if you were shorting, this could be a potential area to cover. Or if you want to look for long positions, hey, maybe this might be a potential area to start looking for longs. Now, it doesn't mean necessarily the price is going to get down here. Remember, this could very well be a bull flag. So if price starts moving up to the upside and you're long, where can you potentially think of taking profits? Well, we have a gap fill right here, and then that also lines up with the upper expected move for tomorrow's trading session being at 408.50 cents. We're going to round it up. Now, can it go higher? Yes, there are things called 2 sigma moves, right? Where you have 2 standard deviations. So if the expected move is $4 and you go 2 standard deviations out of it, that could bring us down to roughly the lower expected move and also roughly to the upper weekly expected move up here at 412 or down here at 396. So those are what we're going to be paying attention to tomorrow. Remember, if price were to come down here, that doesn't mean you just, if it crashes down to this level, it doesn't mean just go long or cover. You want to see on maybe the smaller time frame if you're trading intraday, which I'll get more intricate here momentarily, like a 2-minute, 5-minute, whatever you find comfortable. And you could see how price action works itself in that area to see if it builds a base and potentially moves higher, or if it starts to top out or distribute. Remember, actually, if I were to bring up the S&P 500, this is a 5-minute chart. This is, I was looking at this intraday for a little while here. Unfortunately, I couldn't trade much today. I was out of office, but if you see here, take a look. So the S&P 500, the 15-minute time frame, let me go back over here. It was strong throughout the day, right? A big strong move, but then all of a sudden it started going sideways. But if you go into the 15-minute chart, look at what you saw here. You saw these big red candles. Boom, one big red candle came back up. Another big red candle. Boom, another big red candle. And you can see here, if you actually look down, you're starting to see volume spikes right in these areas, which could potentially mean distribution. And as you can see, when we broke that daily VWAP, that's when price action and sellers started to take charge. And you could see the daily VWAP started to trend down after that point. Okay, so that is something you could pay attention to if price were to get up into one of those areas. Now, a couple other little indicators here. I have the RSI and the price momentum oscillator down here. You can see that the bearish crossover did take place, right? We did gap up, we pushed a little higher, but it did end up reversing on itself as we kind of expected. RSI worked itself off. Remember, it was getting pretty frothy, coming off a little bit, but there's no red flags here at this particular point in time. Now, at the beginning of the episode, I said, let's talk about some secret levels, right? Some key levels. Now, the market closed right here. If you don't know this software is called Bookmap. Bookmap, if you trade intraday, this is probably the most powerful software, at least in my opinion, that you can have. Bookmap takes level 2 data or market orders and it paints them on the screen. So yes, you can look at a candlestick chart, right? And you can say, oh, it was resistance here and it was support here, right? And this is for intraday trading. I'm just looking at a weekly time frame here. But if you look at this kind of takes the blindfold off. It lets you see the orders that are hanging out behind those candlesticks. So you can see here, all of a sudden after the market closed, we have this that popped up on the screen a little bit later on. So that's at 40.95, 4,100. So you can see it's this kind of white bar going across the screen. It lets us know that there are orders here, and you have this spike over here taking place too. It's based off, it's a heat map. So the darker it gets, right over here, the darker it gets. You can see price came up today, boom, boom, boom. And what happened right here? Well, it started getting a little bit more red, right? So it tells us that, hey, there's more orders hanging out here. And you can see as it got more red, as price came up to this area, guess what? Sellers started stepping in. They're like, you know what? Getting out of positions. Then it broke that daily VWAP and we started heading a little bit lower. So on the downside, we have about 4,010, 4,015. I'm looking at ES right here, okay? And then to note also, if we take a look at the expected move for ES, it's looking roughly at plus or minus $38 from where we currently were when I pulled this. And if I do the math here, that takes us up to right around these key levels, the secret levels, right? To down right around here of these levels. So going into tomorrow's trading session, it's highly likely to see price action potentially come and tag one of these levels. So that's what I want people to be aware of. If we start off pretty strong and we start moving up, hey, we might have price be able to continue to press up into one of these levels. If it starts moving down and trending down, hey, start to look, if you are shorting, if you know how to short, potentially coming down into one of those levels. And those levels, right, they can potentially act as levels of support. They're just orders hanging out, right? So we got to see what price action does when it gets to those specific levels. If you like this type of software, Bookmap offers all my subscribers a discount, and I put the pinned comment if you want to take a look at that stuff. That's all I got for you on today's episode. Everybody have a wonderful night.